Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we came in today to start a new week after a multi-week rally, multi-month rally. I guess, you want to put it in macro terms, multi-decade rally, depending on how you slice it. Any which way, a lot of guys are trying to figure out what to do, how to make money now, especially if you're a trader and you're in, the trenches and you're trying to figure out how these things are going to work themselves through patterns. Are we going to finally get this pullback that everyone thinks should happen or have been thinking it should happen for a while now? At this point, I feel like almost everyone's embarrassed to say they're short or embarrassed to call out like a red dog reversal. Like we saw a micro one in a few different indices or a few different stocks. So it feels like once you get a little embarrassed about talking about the short side, maybe that means that sentiment is getting on the other side somewhat. So with that said, it's very tricky. I know for me, there are areas of the range or the areas of the market that I feel the most comfortable with because I have a bit of a risk-averse nature. So I've talked about different pivot points and how to stay with a portfolio approach, but then at certain points, it gets a little bit trickier for certain styles, especially from the intermediate front. So just real quickly, you go to the chart of the spiders. I know for me, coming into the beginning of the year, it was a bit more calculated for me, and I had it in my thesis that if we broke above 1474, there's no reason why we couldn't get to 1500 plus. So this part of the rally in the beginning of the year, that was somewhat easier for me to stay with multiple positions. I think I had 15 of my highs somewhere in here. Then this was your first pullback. You had your first pullback. On this wide range bar, you had no idea what was going to happen. So you had a small red dog reversal. Then we held higher, and and then from there, it made sense to get back involved. Okay, it was still only February. You had a whole quarter in front of us. Last year we rallied the whole quarter, so when we took out 1530, it was somewhat easier to get back involved in a lot of different names. So I think the time for me that got a little tricky was when we did this, push through failure, okay, and then held the 50-day. I think a lot of guys would have liked some kind of right shoulder here to build for then a bit of a retracement to feel a bit more comfortable, but it didn't happen. It could always be worse, and I feel like I'm getting consoled by people on my desk a little bit. They're like, well, you could have been short this whole way up, which I haven't been, but it feels like a lot of opportunity that a more risk-averse trader might not be taking advantage of. So, with that said, when I talk about my three different hats as like an offensive coordinator, which is what I put out there in the media, whether it's a 2013 thesis that had 8 stocks and some people bought them all, some people bought a few, some people used it as a roadmap, whether every morning we come in here and we do a morning call where we talk about, we call it sometimes the low-hanging fruit. Where's the setup? How could you make money? What's lining up on a lot of different levels? So that's a way to make some short-term and intermediate money. And then it's, me as a trader, depending on what I want to grab, what my schedule looks like, and what type of risk I want to put on. So there's been a lot of nice trades that have triggered from off the charts, from the price point sheet, from the morning call, that sometimes if you're with me on the VTF, I'm not in. Doesn't mean you can't be. It all depends on what you're doing and your time you're allocating. But anyway, with that said, you go back to the chart here, and you will see, as we held higher here, we came into that jobs Friday, and then you gapped up, and from there you had a quick move, little bull flag, continued, hold on, let me just get the little pen here, continued higher, okay, and then, extended, and now today, who knows what this really means, okay? We're a few days before the Fed. Granted, I think it would be a bit disrespectful if they gunned the market into Big Ben's testimony, why not, and to test him on saying whether or not he's going to pull the pace down. So anyway, not a blaring reversal, but went through 167.04, made a high, came back below it. It's extended from the 8-day, from the 21-day. So if you wanted to clean up some things, okay, doesn't necessarily mean everything's a short. You clean it up into that. Especially, you want to talk about two different trends here. So this is your just say accelerated trend, okay, where as if, I guess, this is something that to measure if something happens differently. But all in all, this accelerated trend, which is coming after, a more macro trend, right? A macro trend that, hasn't even been tested in a long time. Remember, we even talked about this trend, which this was like an intermediate trend that it's extended from. So at this point, yes, can we continue to go higher? Yes. Can we be higher in 3 months from now, but lower first? Of course. It all depends on your approach. And right now, small little push through, but obviously could mean just a little bit of rest. Why not? So with that said, you want to look at some sectors, see what they did, see if there's any more, anything more extreme. So home builders that have been a source of strength, they ended a little bit more red. I would say here's your 8-day. Here is this extended or accelerated trend line. If it were to get below here, perhaps a test of the 21-day. This thing, likes to, be the weakest first and then just make new highs. You saw it right here. Remember that. Came in, broke this. It's done this a few times where you've had a few accelerated trends that broke to the downside and tested and came back, broke, tested, came back, and then obviously here is where it had the continuation. So up here, let's see what happens. But there's no reason why you can't take a little bit off, because I know a few times somebody took off their trade here and didn't get back in, or took off their trade here from a macro swing and didn't get back in, and there you go. So at this point, it's definitely elevated, so use this as your area. Let's see the Russell, what it do today. Russell, still trending higher. Let's see what IYT did today. It looks kind of similar to the home builders, where here is your last calculated wedge that broke to the upside. Nice little bull flag for continuation, and now getting a little choppy here above the 8-day. This group is even on this run came in, tested the 8 and 21 here. This is when it broke below it, and remember this too. This one was one of the first few that we thought perhaps could give us signs that we were getting a rollover before it held and then continued. So at this point, it just looks like mostly everything else. A little bit more red, but these things have not meant much until they do, I guess. So, if your process is not buying something after a big move like this, then wait to make sure if you look at the 21-day, like it's pulled in a few times or gets tight, that's when you do it. As far as the banks still holding tough, this has been a great group for us, for people who read off the charts. Here was your last nice move, to the upside. Not much of a reversal. I tried shorting the FAS today. It didn't really work for me, but it worked a little bit later for other people. But you had to be a surgeon. Goldman Sachs. We've talked about this. This was that first trend. Okay, this is pretty important too. Remember this trend? When it broke above this 121, and then you had a nice flag here. You had a nice gap, and then boom, it held and followed the 8-day the entire time. And then once it broke, all right, it became a consolidation. Okay, and on many different levels, people thought it was over, but then we drew this descending channel and said, you know what? It's in retrospect of this move, this is just a counter trend consolidation or correction, and then it broke above this ascending channel, and then we listed it right around here, and there was your nice move. Okay, JP Morgan, same thing, but now they're not tight anymore. That's why when you catch a trade, and which is what I'm trying to work on also, if you get it at a good price when it's breaking out, hold it, like really trim and trail it. I find myself trim and trailing myself out way too early, where Mark has a much better pain tolerance of sitting through any type of gyrations, and he just lets it go. So anyway, a little bit of a doji here in JP Morgan. We'll see what happens, to see whether or not it could go sideways here and go again, or if it breaks below today's low and wants to pull back and test the 8-day. That's how you micromanage or approach them. If you do remember, okay, on Thursday we came in here and said, let's see what's tight and what could break to the upside. I was out Friday. Some of the, Vicky, Shark Girl, and Taylor, and a few others were on top of this trade. And you look at the OAHs, and there you go. Nice, clean lagger trade. Something that, you could have waited. This was your descending channel. Here was your sideways, movement, so to speak, and here is your clean trade above 44.80, 45.66. I talked to, this is something that I did not do. I did it on Thursday, but I wasn't going to carry it, just because I wasn't in. And then there you go. There's your nice breakout above this weekly level, and it could have been just a day trade for you, or a few day trade, or this could be something you stick with. Okay, lots of stocks in this group acted better, and this one had a nice clean move. Okay, and that was, that's right there. This is something that we were looking for as a trader. Someone, if you're not in swing trades and you're not, carrying positions for multi-months and you're looking for a setup, this was your setup. Nice 2-day move above this, consolidation after a nice bull flag setup. If you were in it from a macro sense and you've had tier 1 as it broke above this descending channel, watched it go sideways, went to tier 2 here, and maybe got back to tier 1 there, you traded cash flow or tier system around your existing positions. Congratulations. This was a nice little trade, nice little target. Okay. As far as the ags, this trade didn't really develop yet here, but it could. Okay, it's trying. So if you look here in the ags and you look here in this setup, it is probably the last sector that hasn't really had really nice movement yet. Here is your descending channel here. This is where now it's flagging. So if the market hangs around and doesn't pull in, which it doesn't seem like it has been, above 55 and a quarter, perhaps opens the door to highs here. Let's just take a quick look at Monsanto. You know, setting up again, stair-stepping higher. Not much excitement, but it's on the move. Today, you know, we talked about in the morning call things to do, you know, because I came in flat. We had a clearing arrangement switch. I'm like, let me find some areas for cash flow. And Baidu was one of my focuses. And Baidu wound up giving a clean breakout or a clean setup. Okay, right. Wow, look at that. You know, you rewind to the morning call and, you know, check out what we talked about with Baidu. And here's a nice bull flag. It actually opened lower. So you could have bought it from negative to positive, and then you could have added when it went through this 95.56. Even on the radio, I called over to the crew. I'm like, what's the real level here? They're like 95.56. And so it could have been Biden area number one when it was negative to positive, since considering it closed well Friday. And then once it broke through, and some probably even bought more when it went into this gap. And then it closed pretty well. And here's a 200-day. Maybe it, you know, it has a little trouble there. But overall, you know, you put a few things together where, okay, now we've seen the Chinese markets bounce back more than just an oversold or a cat flopping around for, you know, dead cat move. So with that said, maybe some money goes into some of these names. So you try and connect the dots. And, you know, you saw a huge move in something like Sohu that's been sustained, okay, after a little bit of a pullback, boom, new highs. All right, sign I've mentioned a lot of different times. Finally, you know, it's starting to clear. Okay, not the hugest move, but it's still, you know, after this big gap up. So if you're a swing trader and you bought in here versus this, you know, it might be choppy, but it's, you know, it's trying to churn higher. So with all this said, you know, Baidu, which has been a quality name in the past, looking for a setup. Here is your nice setup, and you know, now if you want to trim and trail it and hold it, as long as it continues to hold the top 30 here, let it continue to go. You know, more macro, you would say, you know, here is. You know, it's downtrend, so it just poked its head above it a little bit. So now if it could stay above it and go sideways, perhaps buying it through the 200-day, if it's not upgraded or something tomorrow, that could be your next level here. But that was a nice calculated trade. Okay, it actually, you know, people ask me about day one. What does it mean? You know, day one is something like this, where you have a nice tight range, okay, and day one engulfs that range. So day one is an igniting bar. You know, sometimes it leads to day two, day three, which it did this time. Sometimes it doesn't, you know, but one of my rules is never short an igniting bar, because what does an igniting bar mean? It could be igniting a move on a short-term basis, mid-term, long-term. So if it doesn't ignite a move, okay, you know, it didn't work. Maybe it was, you know, over emotion, or maybe there was something out there that who knows what it was. But typically an igniting move on volume then gives, you know, is like your wake up, says, hey, look at me, I just ignited, here's my day one, and then it gets a few more. So my rule is I typically love to buy on a day one, or a little bit on a day two, especially if you open a little bit down with the futures. You know, but come day three or four, you know, I step back, and then unfortunately again with this market, some of these things are getting 7, 8, 9 days in a row, so it's just not in my process to, you know, to buy them or chase them. It's just not part of my game plan, because it's not all the time that these things have 6, 7, 8 days, you know, to the upside. So today with MCP, you know, I bought a little bit. People like, you know, like here, this was a day one when MCP had earnings, but it didn't have any follow through. It pushed through the high here and failed, and, you know, trickled all the way back in. So today was another day one, okay, which you don't want to short, but doesn't necessarily mean it's going to be off to the races. So now, you know, we'll see if, just say, maybe you do get some follow through tomorrow. Maybe it tries to sit and hold 7, and then you get another trade through today's high tomorrow, and then also another one when it clears here for follow through. You know, this is also a laggard stock. It's a laggard group. It's been crushed. So you want to be careful and make sure that, you know, volume stays there. So you go basic studies, go volume, see, you know, what came in there today. And today, you know, you had some decent volume, more than the last few days on that pullback. So you had a huge volume up day, light volume on the pullback, spot to potentially look at. So, you know, that's why I got involved there. Apple, kind of was surprised me a little bit today, where we talked about this potential inverted head and shoulders pattern, with this being the left shoulder, this being your head, and then the time that it would take to build this right shoulder. So at this point, it still looks like that's building. It still could have a bit more time, right? It still can go this way and then that way, and then at some point you get your neckline here, or somewhere around there. But all in all, it went from negative to positive, so some guys caught that, and then some caught the move through 440, which was another level, and it hit as high as 445.80 before pulling in. So we'll see, if it's red day, green day, red day, green day, well, then maybe tomorrow's a red day. Hopefully not. I'm long a little bit, and we'll see if it takes out today's high tomorrow. Maybe it continues this movement, but it might need some more time here. It still has a lot to prove, and I wouldn't get anything too big there. A lot of people caught a better trade than I did. As you look on the 3-minute, look at what it did real quick. Take this off, go to time plates, go to your East Coast. Okay, so here is your, where are we today? It opened lower. Okay, and I always like to play a gap fill, but I'm like, I'm taking Apple off the radar today. It acted like horrendous Friday, got me good while I was away, and PS, boom, traded right back up, and then took out this entire sideways channel from the prior session, and then boom, came up. This also could have been an entry right here. You had a nice bull flag on the intraday. Here's your move, held higher. Okay, I think I talked about, actually, what was it? It was like I said, as long as we hold above, 438 or something. Anyway, it pushed through that 440, never went back below it, gave you an additional follow-through trade, and then just came off at the end of the day and did what these stocks do in the afternoon, which was not great. But anyway, it's still kind of in the game. Google, Netflix didn't have enough power to break into new highs. Maybe they need more time. We'll look at that. I know SCTY, I tried to short it once or twice, and I lost some money there. You go to the daily chart. This is what I'm talking about for me when it gets really difficult. When you have a move like this into 90 degrees, some caught this as a really nice long here, okay, where, wide range bar, it consolidated, traded through this. This would be your buyable spot. So now you have a big move, another big move, close strong. I didn't take it home short or long. Tomorrow maybe you get that exhaustion gap like we saw in Tesla, but who knows? This still is hanging tough here. At this point, I'm not in it, but I watch it very closely. At some point, like this, you could trade it or watch it versus this. This could be, if you have a high level stop, 87.50 is your high level stop. If it starts to act better and get above this 92 to 95, perhaps we get another move to the upside. So at this point, it's had a heck of a move. It is holding higher. It's letting the 8-day catch up. So we'll see. Remember that exhaustion gap? That was a nice little day trade, but it was also a decent buy for some people who did it. Right now, it's consolidating, getting tighter, so it's on the radar. So with that said, the key really is just know your time frame. And I've talked over the weekend about if you have a macro plan, that's one plan. If you have an intermediate swing trading process you follow, that's another. And then if you day trade also for cash flow, that's great. Some people just do one, some people do two, some people do three. You got to do what makes you feel comfortable. Over the weekend, someone's like, "Oh, Red Dog, you going to cash?" I'm like, "Well, not in a macro account that I have with my wife that's been getting participation since 2005 every single month into balanced funds. No, I'm 40, actually 30. What am I, 40 now? Wow, I'm old. That'll be there for 20 years. If you're 68 and you've been doing it for 30 years, and you might need it in a year, okay, maybe you sell some, raise some cash, because you might not have the threshold if we get into some kind of pullback scenario. So that whole macro theme is different for everyone depending on where they are in their life. As far as intermediate process, which is the sweet spot that we talk about professionally here, the portfolio approach, I do have the least amount on, or I'm as least active as I've been for like a week, because I'm, again, a little torn here. We're very overbought. We're a little bit extended. And shorts aren't working, but I just can't sink my teeth in sometimes. I'm trying to look for these add-on trades, which is what we talk about every day, where the action could be. Last week, early in the week was good for the banks. Late in the week was good for the OAHs and whatever. And then we talk about just day trading. Baidu would have came in flat today. Great day trade, right? Open negative, went through the price point, could have picked and chose where you wanted to sell it. So there is action that way as well. So depends on where you want to live and what type of risk you want to have. And up here, I think a lot of people have had one foot in the door, one foot out of the door for a while anyway, let alone now when, it's definitely feeling a little frothy. And with that said, tomorrow's another day. Big Ben speaks on Wednesday. Everyone says that, tomorrow, Tuesday, we're going, what is it, 18 for 18? I made a, funny little bet with someone on my site that I do think tomorrow will be like the first down Tuesday. We'll see. It's kind of like going to the roulette table and saying, okay, there are 17 reds in a row, and I'm just going to take that pain of the next red. But whatever, it's just fun and games. You got to make a little light on things that go on each day. Otherwise, the world and your life is too serious. And since we're only here a limited amount of time, I actually watched Steve Jobs' Stanford, what's it called, speech again, because sometimes, like when I'm feeling a little off, I want to, watch things that motivate me. And it basically, says your time is very limited here. Don't waste it living someone else's life, and do what you love. And if you do that, you could, you look back and you connect the dots. You can't connect them moving forward. In trading, you could actually have a plan moving forward if the market confirms it's okay. But basically, keep running the course and do what you do well or comfortable or what you love. And at some particular point, you'll get where you want to go because you like doing it. And then you'll look back and then you might know some of the reasons why. And I don't know, I'm kind of just babbling again. And it's only Monday. Uh-oh. See you tomorrow at the morning call. Have a great night.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.